Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ending the war in Ukraine, but without anyone from Kyiv. Meanwhile, European leaders are warming up to the idea of joint financing for defense spending. Hamas indicates it is willing to stop governing Gaza after the war with Israel. In an Arabiya interview, the group says it doesn't need to be part of the next phase as long as it serves the interests of their people. Plus, the RBA cuts by 25 basis points for the first time since 2020. However, inflation risks and Australia's strong jobs market see the board remaining cautious on further easing. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Markets coming back online again, U.S. markets, that is. And today you can see that the futures are tilting towards the green, up 0.2% after a strong handover from the Asian session. The Asia-Pacific index up 0.4%. Strong gains out of the Hang Seng today, and also reacting to RBA's first cut in 5 years. So they just cut interest rates by 25 basis points. We're going to talk more about that in a moment, but hence some of the positive handover that we're getting from Asia this morning. The USD, a bit of a recovery today, up 0.2%, though, of course, over the last couple of weeks, we are down about 2% as some of the U.S. exceptionalism trade gets priced out of the USD. And then we've got 10-year yields back up again at 4.50. We're about 3 basis points higher today on trade. Why? Well, because of some of the knock-on effects from Europe. Let's take a look at some of the price action yesterday for Europe. These markets aren't open, so we're just taking a look at the close here, but is noteworthy. The Stock 600 ended the session up 0.5%, so another very strong day for European equity markets. But take a look at the index below. That is the European index for defense and aerospace. Absolutely soared yesterday, up 4.6%. It is at record highs, all-time record highs, as the market starts to account for Europe spending more on defense. So that basket has done extremely well. And also take a look at what happened with 10-year yields in Germany. So the 10-year Bund now is trading close to 2.50, but moved up 6 basis points throughout the course of the day yesterday, again factoring in the potential extra bond issuance that could be coming out of these European countries to finance that extra defense spending. So what happened in the Munich Security Conference of the weekend, yes, important geopolitically, but also having tangible impact today on some of these markets and people's expectations of what Europe are going to do to respond. The other factor that we've been watching as well is gas. European gas contracts, TTF, also plummeted yesterday 5% to account for the possibility of, at some point, more Russian gas hitting the market again. So that was the picture for some of these key European assets that we're looking at. But I did give you a little bit of a tease about some of the price action going through in Asian markets today. Very happy to say that David Inglis is joining us today from our Hong Kong studio. David, just walk us through the price action.
Yeah, good morning. Good to be on the show again. I mean, since you mentioned defense, just to mention as well, we are seeing the same theme play out in defense-related stocks in Japan and Korea, also seeing some upside today. You mentioned the RBA rate decision. We're right at a midpoint right now in the Aussie dollar following this sort of swing as the market digests what it means that the RBA is cautious on further rate cuts ahead. As you can see, the curve is steeper, and BHP, just to mention that, out with earnings as well. The broader snapshot across the Asia-Pacific is really one where you have the benchmark that is simply lifted by, the rally that's continuing across the Chinese tech space as well. In fact, the 10-year yield in China is now up to the highest of the year. And that's really being a source of funding that goes into then the tech rally. In fact, I'll end on that when you look at this. For example, we are in the lunch break here in Hong Kong, and just some massive gains again. 3% on the HS Tech benchmark. In fact, on the Hang Seng Index itself, right as we go into the afternoon session, we're on track right now, very, very close to recouping that high, all the losses from that peak back in October of 2024. So we'll see what the afternoon session holds. Back to you.
Yeah. David, how much of that optimism is on back of the meeting that President Xi had with some of those senior officials yesterday from the private sector? Just quickly.
Yeah, I mean, certainly that is a really, really big factor. Very good optics. If you recall, going back to 2018, 2019, that was really when the sort of regulatory correction took place. And certainly us bookending that is really, really good. It's symbolic. The market's being able to put that behind us. Now, the question is whether or not these valuations can then sort of correct back and retrace all the way back up for 5 years, because that's a long way back up from current levels still.
Yeah, it's still a long way to climb. David, great to have you on the show. David Inglis in Hong Kong. Now back to the top geopolitical story of the day. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ways to end the war in Ukraine without any representatives from Kyiv. The talks come after a phone call last week between Presidents Trump and Putin, but Ukraine has called the talks dangerous without their involvement.
It's obvious, it stands to reason to expect that the talks should be held first with Ukraine to hear our position, to hear what we have to say, and then so the main thing is to avoid these backdoor channels, this back dealing. It doesn't help the situation, and you have to understand the mind of the people who you're meeting with before you can proceed. That's important.
Meanwhile, French President Emmanuel Macron hosted fellow European leaders in Paris to discuss the EU's defense capacity as well as the war. German Chancellor Olaf Scholz making his views clear on Ukraine's absence from peace negotiations.
It is completely premature and completely the wrong time to have this discussion now. I'm even a little irritated by these debates, I have to say. This is highly inappropriate, to put it bluntly and honestly.
Well, joining us now is Tony Halpin, who leads Bloomberg's Russia government and economy coverage. Talk to us about some of the main takeaways from the European summit, the mini-summit that took place yesterday.
Yeah, I think the main thing we learned yesterday, it's very difficult for Europe to get its act together quickly and find a response to what President Trump is doing in relation to Russia. We had a discussion, as you said, led by Emmanuel Macron about potential defense capabilities, but they couldn't even really agree whether they were ready to send troops to Ukraine in the event of any peacekeeping agreement. Britain has said it is willing, after a post-ceasefire settlement, to send troops. Poland, which is another major power, said it's not willing. So it's very difficult to see how they can have a unified position, which is what Trump is looking for.
Yeah, and I saw that there were some European countries who were even annoyed that they weren't invited to this summit to begin with. So they're being double sidelined, even by Europe and,
yes,
the conversations around Ukraine. Let's talk about the meeting that's taking place in Riyadh today. The Secretary of State, Marco Rubio, is already there. I've seen reports that Lavrov is also going to be attending the meeting that's taking place. What can we expect from the discussions between the U.S. officials and Russian officials?
Well, I think there are two key things, really. First, it's a matter of tone, right? It's a question of the US and Russian officials meeting together at a very high level for the first time, really, since the war broke out. As we know, Kyiv is not there. Europe and Ukraine are looking very closely to see how these two sides interact with each other. From the Russian point of view, they're looking really to restore US relations in order to talk over Ukraine and try and do a deal with Trump. From the US side, I think they're looking to explore how eager Russia is for a deal and whether some sort of ceasefire can be agreed before a longer-term settlement.
Yeah, the Trump administration have told their European counterparts that they expect the ceasefire to be agreed to by April or by late spring. How feasible is that timeline, do you think?
It's pretty difficult. I mean, this is a war that's been going on for 3 years. Russia currently doesn't have much incentive to stop fighting because they're advancing on the battlefield. And Ukraine certainly doesn't want to put itself in a situation where it might be weakened by a ceasefire without any long-term security guarantees. So both sides are looking really for some sort of assurance that a ceasefire would make sense for a longer-term agreement. And that's one of the things we'll try to learn today.
Yeah. Tony, thank you very much. Well, we'll definitely circle back with you tomorrow to see what comes out of that meeting. Tony Halpin leads Bloomberg's Russia government and economy coverage. Well, over in the Middle East, still in the Middle East, Hamas has indicated a willingness to stop governing Gaza after the war with Israel. The group says it is not necessary for them to be part of the political and administrative arrangements in the next phase, as long as it serves the interests of their people. The concession could fulfill one of Israel's demands for a second phase of the truce, but there's no sign of another demand for Hamas to disarm of being met. Now, let's bring in Abir Abu Hamad, Bloomberg's Deputy UAE Bureau Chief. Is this the first time that Hamas are so explicit about not having the desire to take up a governing role in the future of Gaza? It feels like this is the first time we've heard those comments from them.
Yes, Joanna. Since the start of the war, this is the first explicit example of Hamas saying we're willing to cede power, political power, in the Gaza Strip if it serves the interests of the Gazan people. This is the group's spokesperson talking on Arabiya TV, saying that Hamas is willing to cede power, and that should enable the second phase of the truce talks to start. But then again, as you mentioned, the other demand is for Hamas to disarm, and that's something that they haven't been willing to cede. Another thing that is standing in the way of the truce talks, the second phase of the truce talks continuing, is Israel hasn't really given any kind of indication of what a ruling party in the Gaza Strip would look like. This is post Prime Minister Netanyahu's visit to the White House. So we don't know what Israel's demands are. Now, some analysts that we've spoken to have said that continuing to let Hamas carry its weapons in the Gaza Strip would really be a replica of Hezbollah in Lebanon. And so, Hezbollah needed lots of political power in Lebanon without having, any political, without having, the political majority in the government. Yeah. So that's what we're
For
hearing.
a while they did. And I guess the parallels are really interesting because of the situation right now in Lebanon. We're coming up to the end of the ceasefire deadline for Israel to withdraw completely from the southern part of the country, and yet they have said that they're going to maintain 5 army posts. Give us more information about exactly what they're thinking here and how the response has been.
You're right. So the truce that was already extended, today is actually the deadline for that truce, November 18th, right? This was the truce that Hezbollah and Israel have reached to in November. And essentially what we know is that Israel has retreated, has given its ground positions to the Lebanese armed forces, except for 5 positions. Now, those 5 positions are key for Israel because they border Israeli cities. And so Israel hasn't been willing to let that go yet because of security reasons, as we heard yesterday from the IDF. So what we know is this truce is happening today. Look, there are optimistic signs of the truce talks continuing, but we'll have to wait and see today what kind of comes out of Lebanon as the deadline approaches.
And it certainly puts a lot of pressure on the new Lebanese government as well. Abiyad, always good to have you on. Abiyad Abu Amar, Bloomberg's Deputy UAE Bureau Chief. And still ahead, hear why Bank of Singapore says it has an overall risk-on stance for its asset allocation strategy. Their global CIO, Chia, joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Shares in Hong Kong and China have extended gains on expectations a meeting between President Xi Jinping and business leaders will give a boost to private companies. To discuss the outlook for equities and more is Bank of Singapore's global CIO, Chia. Really good to have you with us. We're looking at the handover from Asian markets today, pretty positive. European markets, very solid day yesterday. U.S. markets as well, been a relatively resilient start to the year. It seems as though, irrespective of all of the news flow of inflation and tariffs, these global equity markets continue to perform quite well. Do you expect this risk-on sentiment to continue?
Yeah, thanks very much for having me. I think you're absolutely right. There's been a bit of a recovery in all markets across the board, and China in particular, of course, as you mentioned, there was the meeting, the symposium with the tech leaders, and it's really a breath of fresh air to know that the administration, the Chinese government is now back in business, so to speak, and also talking to the tech leaders as well as business leaders about the pro-business stance. I think that is a strong endorsement of what's been happening on the Hang Seng.
Do you think that is a major event that took place yesterday, this meeting between Xi and business leaders? Yeah,
absolutely. I think, of course, from the beginning of the year, we've had a bit of a boost from DeepSeek and the advent of AI that is much more ubiquitous and more accessible to businesses around the world. And this is clearly another step in that direction to just reinforce the fact that China is back in terms of innovation as well as business growth. That, of course, the countervailing force around that is the tariff threat from the US. We cannot underestimate that still. But on balance, I mean, versus the worst case scenarios, people were painting on a 60% tariffs. I think we've come to a slightly more moderate stance in terms of expectations of what that could mean.
Yeah, so I want to take you back to some of the conversations around China that I was having towards the end of last year, even before Trump got elected.
Yeah.
The Chinese authorities were trying to stimulate the economy, coming out with piecemeal package after package after package, very directed, targeted. But the feedback that I got back then was that they weren't doing enough to stimulate consumption. How is the environment this year different from where we were in 2024, irrespective of tariffs?
So at Bank of Singapore, we actually upgraded the Chinese equity market, Hong Kong as well as Asia ex-Japan in the middle of last year. And since then, September, of course, was the whatever it takes policy that has come up. Granted, there has been criticism that has been too piecemeal, but I think it's more of a step-by-step sort of policy stance, given that there was also the tariff reaction and the Trump administration stance that China had to take note of before it came up with its own package, so to speak. But what we're seeing today is really a resumption of focus, not just on the big picture infrastructure style of policy making, but more in terms of business growth. And I think the emphasis on innovation is quite critical, because that's where you're going to see a bigger growth and a shift away from a very policy and property-led economy into something more of a consumption and tech-driven recovery.
Yeah, so do you think the rally that we've seen in Chinese tech stocks is taking some of the luster away from wanting to own US tech stocks here?
No, I think it's not a zero-sum game as far as the race, so to speak, on tech supremacy goes, because there will be a lot more opportunities. So we believe that, the lower cost of AI access, demonstrated by the Jevons paradox, which really means that we will see a broadening out of AI beneficiaries all the way from, hyperscalers to your tech providers and platform companies to the supply chain. So I think this larger development is that as AI becomes ubiquitous, the winners and losers are not as easy to figure out now, but it also means the opportunity set has expanded globally.
Yeah, so then how are you allocating your global portfolio right now?
So right now, across the global asset allocation framework, we're now overweight equities with a focus of overweight on the US as well as Asia ex-Japan. Two areas that we think that, in the midst of this tariff discussion, there are still a lot of important developments on the fundamental and structural side. We are neutral Japan as well as Europe, and in terms of the equity market. Now, overall, we think that US exceptionalism this year continues in terms of US growth, US dollar strength, and US equity recovery and strength. However, the sting in the tail, I would say, is inflation.
Yeah.
And that's what you mentioned earlier as well. There is going to be still a risk of inflation coming back due to what's happening on the tariff front and the fiscal boost from potentially lower taxes in the US.
Yeah.
So
those
rates,
are the potential headwinds.
That's right.
Yeah.
So rates volatility does point us to the direction of being underweight fixed income. That's not to say we're not owning fixed income, but just actively managing our fixed income portfolio.
Very clear. Jean, great to have you on.
Thank you.
That was Jean Chia, Bank of Singapore's global CIO. Now, still ahead, growing fears of a regional war as M23 rebels gain control across eastern Congo's border with Rwanda. We'll have an update on the conflict next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. BHP's first half profit slumped 23% as China's faltering economy dampened demand for iron ore, prompting the miner to trim its interim dividend to an 8-year low. CEO Mike Henry spoke to us about the outlook and managing expectations in China. And Southwest Airlines says it will cut more than 1,700 jobs in its leadership ranks, impacting 15% of corporate positions. They're the first layoffs in the U.S. carrier's history. The cuts extend the upheaval that's gripped Southwest for much of the past year, including a battle with activist Elliott Investment Management, a board overhaul, and significant operational changes. And it's reported that Honda is willing to resume takeover talks if Nissan's CEO steps down. According to the Financial Times, Honda would be prepared to revive negotiations under a new Nissan boss who can better manage internal opposition. And Bloomberg has learned that Elon Musk's government efficiency team is trying to access a broad range of taxpayer data, including on individuals. The effort has prompted Democratic lawmakers to raise concerns over privacy issues. The U.S. has strict laws that prohibit the disclosure of taxpayer data, with some exceptions for law enforcement. And German Chancellor Olaf Scholz and Conservative frontrunner Friedrich Merz have effectively ruled out serving together in the same cabinet. The two candidates were asked at a Q&A with voters yesterday evening if they could envisage being in the same government after this Sunday's election. The CDU's Merz replied, "That's something we both see as unlikely." President Javier Milei has spoken for the first time about a cryptocurrency scandal that has dented his reputation in Argentina. Milei confirmed he met with the people who proposed and launched a so-called meme coin called Libra. He said he didn't post about it on social media with the intent of persuading people to buy it, but to raise awareness in an effort to support Argentine businesses using crypto. Israel's economy grew at its slowest pace in over 2 decades last year, excluding the pandemic, underlining the toll of the wars fought throughout much of the year. GDP expanded 1%, reflecting a slump in fixed investment and exports. Defense-related expenditure was the main driver of demand in the public sector. And let's take a look at equity futures as the U.S. markets come back online again. S&P futures leaning towards the green, up 0.2%. NASDAQ up 0.3%. They were closed yesterday for trading, but picking on the positive session for European markets yesterday with the Euro stocks closing up in positive territory, up 0.4% or so. Today, leaning as well towards the green. But then also a positive handover from some of these Asian stocks as well. The Hang Seng index today is up 2%. So again, a lot of momentum in these Chinese tech stocks, as well as some positive signals coming through after the meeting that President Xi had with some leading business executives from the China tech community that took place yesterday. And then we're also keeping a close eye on fixed income. Some of the signals coming through from Europe yesterday were negative as investors start to account for further fiscal issuance coming out of the Eurozone. Today, this has meant that U.S. Treasuries are also climbing about 3 basis points higher. 10-year bonds yesterday up about 6 basis points as well throughout the course of the session. There you have it on the screen. All right, coming up, Nathan Sheets of Citi Research joins us live from the Saudi Capital Markets Forum in Riyadh to discuss global economic risks. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ending the war in Ukraine, but without anyone from Kyiv. Meanwhile, European leaders are warming up to the idea of joint financing for defense spending. Hamas indicates it is willing to stop governing Gaza after the war with Israel. In an Al Arabiya interview, the group says it doesn't need to be part of the next phase as long as it serves the interests of their people. Plus, the RBA cuts by 25 basis points for the first time since 2020. However, inflation risks and Australia's strong jobs market see the board remaining cautious on further easing. Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. U.S. markets coming back online again after being off for President's Day yesterday, and the picture is green. We've got S&P futures leaning towards positive, up 0.2%. Much better handover from Asian stocks today, up 0.3%. The Hang Seng is up 2% in trading. We're going to talk shortly with David Inglis about what's been going on there. But in general, very positive momentum for these equity markets. USD also seeing a bit of a bid this morning, up 2 0.2% as well. And then what we are seeing is the 10-year yields coming under some selling pressure, up 3 basis points back to 4.50. Remember, for U.S. investors, FOMC minutes come out tomorrow. So that's going to be another potential catalyst for market direction. But let's flip over, because I want to just draw your attention to some of the price action that we had in Europe yesterday. Now, these indices are closed, but just to point out, the Stock 600 closed up more than 0.5% firmer. As we've been talking about the last couple of days, there's been a strong outperformance for European equities versus global markets this year. The Euro Stoxx 50 is up 14% year to date. But take a look at this particular sector. This is the European sector basket for defense and aerospace, up 4.6% yesterday, all-time record high. Why? Because investors are piling into stocks that they think will benefit from the European focus on defense spending. So this has been one of the major themes that is playing out, both at a micro level and at a macro level. At the macro, look what's happened with 10-year yields, 6 basis points higher yesterday, up almost at 2.50%. Again, as the market accounts for further issuance out of the Eurozone and European economies to account for that further defense spending. So that's been factored in to where fixed income is trading. And then also we're seeing a tangible impact on gas as well. TTF losing a lot of ground over the course of yesterday, down 5%, but down more than 15% over the course of the week. Again, and this is on back of geopolitical developments and the fact that the market has jumped to the conclusion that there will be a truce with Ukraine, and we could at some point see a resumption of Russian gas to the market. So that is the picture for European markets yesterday. All right, let's go back, though, and talk a little bit about how some of these markets in Asia are faring. David Ingles is in our Hong Kong studio. David?
Yeah, in Hong Kong studio, where just this is going to sound a bit unorthodox, but just in case you hear in the background sound of drums and cheering, we actually have a Lunar New Year lion dance taking place here in the office. So that's not typically what you hear when I walk into the studio, cheering and drums. That's actually another thing happening altogether. 0.4% on the Asian benchmark. A lot of that is because of consumer services. A lot of this is actually Chinese tech. I'll talk more about that in a moment. Rate decision coming through out of the Aussie dollar. We're in fact hearing out of the RBA right now. This is a rate decision tomorrow, so just pay attention to that again as we flip the page on the day itself. We're near session lows, by the way, on the Aussie dollar. Right, here we go. As promised, 3% at the break. Really, it helps the fact that you are getting this sort of massive meeting, symposium is the word that they use there, between top Chinese officials, including Xi Jinping, voicing their support for the private sector. That's leading to gains today. And really, this losses we're continuing to see in the CGB space, perhaps as a funder for that trade up there. Very, very quickly, some of the names that are bid up today substantially, and the next goalpost here will be Baidu, which is set to report earnings today before the U.S. markets open, I believe. So watch what they say and how they say it around the tech story. And I'll leave you with a look at this chart before I go. It's a look at the net flows across the Stock Connect into the Hong Kong market from mainland China. It's currently positive. We're on the break. This is indicative, really, of demand coming from Chinese investors for Hong Kong-listed tech stocks. This tends to flip. Let's see if it holds and shows you this positive number throughout the course of the session. Back to you.
Yeah. Oh, well, the other major event that you touched on is RBA cutting rates by 25 basis points for the first time since November 2020. But I would say it's a cautious cut because we are just getting some commentary now from the RBA Governor, Michelle Bullock. We're going to listen in a second. But what she did just say is today's decision does not imply further cuts are coming. Let's listen in.
Hello, Governor. David Chow from ABC News. So what are the chances the Reserve Bank is one and done when it comes to interest rate cuts? And today's cut could be the only one that we see.
Thanks, David. I couldn't say. What I would say is that the market is expecting quite a few more interest rate cuts till the middle of next year, about 3 more on top of this. Whether or not that eventuates is going to depend very much on the data. Our feeling at the moment is that that is far too confident that that's as many rate cuts as we'll be having. So I can't say one and done. What I can say is that we've done one, we've removed a bit of restrictiveness, we are still restrictive, and we are waiting for more evidence that we're getting inflation sustainably back in the band before we are willing to move again.
Governor Bullock, Jack Quayle from The Australian here. The RBA seems to be an outlier when it comes to estimating full employment. Granted your forecasts, can the economy sustain unemployment at 4.25% to hold inflation within the RBA's 2 to 3% target band?
It's a good question, Jack, and there's a lot of debate out there in the market about what level of unemployment or employment is consistent with low and stable inflation. I have to say at the moment we're a little surprised because we have seen inflation continuing to come down at the same time as we judge the labour market is still a bit tight. But there are things that are happening. We see housing costs are starting to decline, which is good, and that's a big part of people's expenses. We also hear from Liaison and other areas surveys that business margins are being squeezed a bit, which suggests that demand is not strong enough for them to pass on these things. So these are sort of, we don't know the full answers yet. And as I said, I've said in the past, I think, what that level of employment is actually really uncertain. So we're not pinning our numbers on it. I'm certainly not pinning any number on what that unemployment rate is. But we are continuing to test how low we can keep unemployment without adding to inflationary pressures. And so far, in good news, we're achieving it, but there are risks. We've got to be careful.
All right, that was the RBA Governor, Michelle Bullock, talking to journalists after the first rate cut came through since November 2020. It was widely anticipated by economists, but I would say the language that she's delivering is certainly quite cautious, saying that today's decision doesn't imply further cuts are coming and they can't declare victory on inflation yet, so would have to lean towards a slightly more restrictive stance. So that was the latest coming through from the RBA. Now, at least 15 people have been injured after a Delta Airlines plane flipped and came to rest upside after landing in Toronto. The plane, flying in from Minneapolis, had 76 passengers and 4 crew on board. For more, Bloomberg's EV supply chain and aviation reporter Danny Lee is in Singapore. Danny, another airline accident has taken place. It feels like they're happening with more frequency. It certainly appears to be the case because we're talking about them a lot more. Just walk us through what happened exactly yesterday with this flight and why it flipped over, the plane flipped over.
Yeah, good morning, Jemana. Another event and another event that resulted in an aviation accident. And the images that we see on screen, very spectacular. The fact that this CRJ plane for Delta Airlines ending up on its roof. But it's more remarkable that given the plane was landing at the most critical phase, only ended up with 15 injuries and no fatalities. And given that this plane was landing in very windy, icy conditions into Toronto, I think it's a good outcome considering all things considering with this. But it just adds up to more scrutiny and more people watching aviation safety more broadly in North America, particularly what has happened in recent weeks, not least with that American Airlines jet and that US Black Hawk helicopter crashing in DC, colliding into each other. So yeah, there's a lot more scrutiny more than ever, and unfortunately not great when you see these kind of events happening with the regularity, but still aviation does remain to be very safe.
Well, obviously, aviation safety is now coming under increasing scrutiny because of the number of these types of freak events that seem to be occurring. But then there have also been dismissals affecting government workers in the U.S. Federal Aviation Administration. So what has been the fallout from all of this?
Yeah, I mean, the optics and the contrast here is quite remarkable here. The fact that over the weekend it emerged that the U.S. administration had dismissed hundreds of workers in the Federal Aviation Administration, according to the union. These kind of workers who cover a range of functions, all very important. At the moment, we've got one of the unions representing the air traffic controllers who are saying they're reviewing the firings in these positions because they are concerned about the loss of talent, manpower, skilled manpower in relation to upholding aviation safety in the world's biggest aviation market of the US. But this comes at a time where the US is trying to grapple with obviously what was one of the worst fatal accidents to have taken place in terms of aviation in the last couple of decades. And so even as we speak, the fact that Elon Musk and the Department for Government Efficiency, as it were, being called in to try and help modernize US air traffic safety. So, clearly a lot going on, a lot happening, but, at the same time, when these incidents keep happening, there's a lot more questions about, are these decisions being taken by the government the right ones? So we'll closely monitor those as they continue to fall.
Bloomberg's EV supply chain and aviation reporter Danny Lee, thank you so much for reporting on this important story. Now, coming up, M23 rebels tighten their grip on a major strategic city in the Democratic Republic of Congo's mineral-rich east. We'll discuss what it means for the region next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. M23 rebels are tightening their grip on the eastern DRC after the Rwanda-backed rebels took control of the strategic city of Bukavu. It gives them control of all of eastern Congo's border with Rwanda along Lake Kivu. Bloomberg's Andiro Ganga joins us now from Kigali in Rwanda. Andiro, what does the fall of Bukavu into the hands of M23 rebels actually mean?
Hi, Jumana. So Bukavu is a city of 1 million people, and it's key transit point for gold that has been mined in the south of Kivu province, which is then smuggled into neighboring countries and laundered into the global ecosystem, according to UN expert reports. So it's a very strategic place for M23, and it's part of what prompted President Felix Tshisekedi to ask the EU not to buy minerals from Rwanda, alleging that they've been stolen from Congo. M23 last month took over Goma, the largest city in the eastern part of DRC, 3 million people, and from the fighting, 3,000 were left dead, 3,000 injured, and the city is now short on supplies like food, water, medicine, and electricity. And this was part of the issues that was discussed at the Munich Security Council, where President Felix Tshisekedi was asking, how is it that the sovereign and territorial integrity of a country has been violated, its inhabitants massacred, yet there's no action or sanctions against the perpetrators? And he also pointed a finger of blame at the UN and AU for failing to apply pressure on Rwanda for backing M23 rebels, allegations that Rwanda continues to deny.
Yeah, well, it looks as though the M23 are going to continue tightening their grip on these eastern cities. And we know last week we were talking about it. A summit was held. Many leaders got together to try to work out a solution to the conflict. And yet nothing has happened. So what is the likelihood that the international community responds this time around?
Jumana, what we are seeing now is just condemnation, but at least the voices are being added into the conversation. The UK Foreign Office says that M23 occupying Bukavu is not only sovereign and territorial integrity breach of DRC, but also breach of UN Charter, and has demanded an end of fighting and called for withdrawal of Rwandan troops from DRC, which is a really, really big step. You also have France's President Emmanuel Macron, who had a conversation with Tshisekedi and also called for M23 to withdraw from Bukavu and the airport to allow for humanitarian and civilian planes to land. But the big news was the EU lawmakers asking the Commission, its member states, and international financial institutions to freeze any budget support to Rwanda until they cut all ties with M23. So we're beginning to see that pressure gradually starting to be applied at the international level.
Yeah, and key is to how the Rwandan government actually responds here. That seems to be the secret to unlocking all of this. Bloomberg's Andiro Ganga in Kigali. Thank you very much. Now, the warring factions in Sudan's 2-year-long civil war are planning to announce parallel governments, a move that may lead to a Libya-style split of the devastated North African nation. We're told a coalition of Sudanese political entities will sign the founding charter of a new peace and unity government today. That would be allied with the Rapid Support Forces paramilitary group. Now, since the start of the war, at least 150,000 people have been killed and more than 12 million others displaced. The IMF says South Africa must take bold steps to ease a suffocating debt burden and boost economic growth. The Washington-based lender says it is recommending a fiscal adjustment of 1% of GDP per year for 3 years. And steps South Africa could take to achieve this include wage discipline, accelerating reforms as struggling state-owned enterprises, and tighter control of government procurement. Anglo American Platinum has declared an additional cash payout of $852 million in preparation for an exit by parent Anglo American. Anglo announced plans to exit its controlling stake in Amplats last year as part of a wider restructuring to fend off a takeover proposal by BHP. The demerger is due to take place in June. And Old Mutual is embarking on a search for a new chief executive to replace Ian Williamson, who will step down at the end of August after 5 years at the helm. Williamson, who has been with Africa's biggest insurer by assets since 1993, is to take early retirement. The changes come as Old Mutual plans to roll out South Africa's newest bank by the end of this quarter. And coming up, Nathan Sheets of Citi Research joins us live from the Saudi Capital Markets Forum in Riyadh to discuss global economic risks. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. BHP's first half profit slumped 23% as China's faltering economy dampened demand for iron ore, prompting the miner to trim its interim dividend to an 8-year low. CEO Mike Henry spoke to us about the outlook and managing expectations in China.
So look, I'll start with the last half performance, which was another solid operational and financial performance for the company. Good cost control within the business and production firing on all cylinders right across the business. You look at our iron ore business with record shipments for the first half, notwithstanding some of the pressures in the iron ore market that you refer to. Production in our steelmaking coal business in Queensland up by 14%. And the real exciting story here is copper production up by 10%. And that keeps us on track for 24% growth in this very important critical mineral over a 3-year period to the end of this financial year. Now, what are we seeing by way of near-term commodity demand? Yes, there has been some overall economic challenges or headwinds in China, but the sectors of the economy that are important to BHP's commodity demand, for the most part, have been performing strongly. The exception, of course, is the property sector. That has been under some pressure, but we're starting to see some green shoots there by way of increased new starts, property price rises in some sectors. So I think we'll see some momentum building into 2026. And we also expect that with a pro-growth stance having been reiterated in China, that they will calibrate their policy measures to ensure that the domestic economy stays on track or continues to gain momentum. And they'll calibrate those measures based on what they're seeing in export markets, with there obviously being a heightened degree of uncertainty there currently given policy settings in some other jurisdictions.
All right, that was BHP CEO Mike Henry, BHP CEO, speaking to us there. Let's get out to the Saudi Capital Markets Forum. The Citi global economist and head of research, Nathan Sheets, is there. Really good to have you with us. Let me just start off by asking you, there's been so much noise around tariffs, but not a lot of action. How do you see this all affecting the global economy?
Yeah, I think that's absolutely right, that Donald Trump so far has largely used the tariffs mainly as a negotiating threat to achieve other objectives that he has, particularly with respect to securing the southern border of the United States. Now, my expectation is that over time he's likely to announce some additional tariffs. But I think at the end of the day that the totality of the tariffs we see this year is likely to be a notch less than what many in the markets had expected 2 or 3 months ago.
Yeah, there is this theme of U.S. exceptionalism that was really picking up momentum in the markets towards the end of the year, last year. Now, some of that shine has come out in the first month of 2025. But do you think from an economic perspective, U.S. exceptionalism is going to be with us in 2025? The theme of U.S. exceptionalism? Is U.S. exceptionalism going to be with us in 2025? Okay, it looks like we have lost connection, sadly, with Nathan Sheets. That was Global Chief Economist from Citi, Nathan Sheets, just beginning the conversation with us from the Saudi Capital Markets Forum. A shame. We'll try to reestablish connection because it will be very good to hear how he's thinking about the state of the world, tariffs and all, but some of the signals coming through from all corners of the world, the U.S., Europe with their recent drive and push for extra defense spending, and China with renewed interest in Chinese tech stocks. But speaking of markets, let's just take a look at how some of these equity futures are faring as we head back into the U.S. session, with some of these U.S. markets coming back online again, well, all of them coming back online again after President's Day. S&P futures up 0.2%, NASDAQ up 0.3%. You want to watch out for FOMC minutes this week. That could be another catalyst for market drivers from this point onwards as we get towards the end of the earnings season. And Euro stocks not doing a lot today in future space, but building on from a positive session yesterday. The index ended up almost 0.5% firmer. But then we also saw some big moves in fixed income. So if we just flip the board for a second, U.S. Treasuries, which are back online today, are trading 3 basis points higher. So we're back at around 4.5%. And these are the futures. But the bottom line is European fixed income set the tone for global fixed income. It was a heavy day of trading as investors started to account for more fiscal issuance, more bond issuance out of European entities and European sovereigns throughout the course of this year. So that is the picture for fixed income. Coming up in the next hour, Charles-Henri Monchau joins the show with his market outlook. I'm Jumana Bersachi in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ending the war in Ukraine, but without anyone from Kyiv. Meanwhile, European leaders are warming up to the idea of joint financing for defense spending. Hamas indicates it is willing to stop governing Gaza after the war with Israel. In an Al Arabiya interview, the group says it doesn't need to be part of the next phase as long as it serves the interests of their people. Plus, the RBA cuts by 25 basis points for the first time since 2020. However, inflation risks and Australia's strong jobs market see the board remaining cautious on further easing. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, we did get that RBA decision, but still watching very closely geopolitically what's happening in the Middle East, in addition to these discussions with European leaders.
Yeah, it's interesting you bring up the RBA. I thought the cautious cut was interesting. They did cut by 25 basis points. At the same time, they're saying that inflationary pressures are still there, which is reflective of all of the conversations that these central banks are having around the world. Because at this point, there is so much uncertainty about what tariffs may mean, whether it's bad for growth or positive for inflation or send inflation higher. So as a central bank, there still is a lot of uncertainty, and that came through from the RBA. So yes, interesting data point there. But also, let's just take a look at broader equity markets, because U.S. equities are coming back online today after President's Day yesterday, leaning towards the green. S&P futures up 0.2%. Asia Pacific, the Hanover positive. Hang Seng, very strong session today, up 2%. The money keeps pouring into some of these Chinese tech stock names. USD also slightly firmer today, up about 0.25%. And then 10-year yields up 4 basis points, just sitting at 4.51%. Again, FOMC minutes are going to be in focus this week. But flipping over, I also just want to take a look back at some of these key European indicators yesterday, because we saw a strong reaction in European equity markets to the geopolitical developments over the weekend. So take a look at this. Stoxx 600 up 0.5% yesterday in trading. The sector that is focused on defense stocks and aerospace up 4.6% higher by the end of the day yesterday, at an all-time record high, as investors pour into the sectors that they think will benefit from the European focus on on the defense spending and defense stocks in the years ahead. 10-year yield in Germany also moved 6 basis points higher. Their investors accounting for further issuance to fund some of that defense spending. And then European gas, so TTF is what we were looking at yesterday, dropped 5%, down more than 15% over the course of the week to account for the possibility of that truce in Ukraine and the potential resumption much further down the line of Russian gas to the market. So that was the picture for key European assets. But let's go back to the geopolitics. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ways to end the war in Ukraine without any representatives from Kyiv. The talks come after a phone call last week between Presidents Trump and Putin, but Ukraine has called the talks dangerous without their involvement.
It's obvious, it stands to reason to expect that the talks should be held first with Ukraine to hear our position, to hear what we have to say, and then so the main thing is to avoid these backdoor channels, this back dealing. It doesn't help the situation, and you have to understand the mind of the people who you're meeting with before you can proceed. That's important.
Meanwhile, French President Emmanuel Macron hosted fellow European leaders in Paris to discuss the EU's defense capacity as well as the war. German Chancellor Olaf Scholz making his views clear on Ukraine's absence from peace negotiations.
It is completely premature and completely the wrong time to have this discussion now. I'm even a little irritated by these debates, I have to say. This is highly inappropriate, to put it bluntly and honestly.
Joining us now is Bloomberg's Russia economy and government editor Greg Sullivan. Let's just start with that summit that was held in Paris yesterday. European leaders, not all of them, some of them got together to discuss the action plan for Ukraine. What did we get from that summit? Any major takeaways?
Well, it does seem like European leaders are actually scrambling right now. They seem to slowly be formulating a response, which is in sharp contrast to the speed at which the Trump administration is really trying to move on these negotiations with Russia. I think it's very apparent that there's a fear among European capitals that they will be sidelined in discussions about European security and, of course, Ukrainian security. So for them, the challenge is how do they convince the Trump administration they need to be at the table, they need to be part of these discussions? That probably revolves around how much of their own defense they're willing to take on. Trump's been a known quantity on NATO, and that seems to be the crux of the issue.
Yeah, not just defense spending, but also a peacekeeping presence as well. And it was interesting that the UK Prime Minister Keir Starmer seems more open to providing a peacekeeping presence in Ukraine than some of his European counterparts.
I think that's a key point here. I mean, one of the sticking points in any negotiations is going to be what are the security guarantees for Ukraine? It's very hard to visualize what that looks like with the U.S. unwilling to put troops on the ground, Europe not able to plug the gap of any U.S. absence, and Ukraine demanding that they need a credible deterrent to Russian aggression if any kind of deal is going to be an actual deal. So that is the key question that we're facing, and Starmer's comments really hint at that and what sort of architecture is needed.
Meanwhile, let's turn to Saudi Arabia because key U.S. officials are meeting with Russian officials today. What can we expect out of that meeting?
Well, there's a few things. The first thing is that this is really about contact between the two sides. This is a huge policy reversal from the Biden administration, where its senior level officials avoided each other, and there wasn't this sort of contact. Contact between the U.S. and Russia has been very minimal, and this is a big, abrupt policy reversal that has caught Europe off guard in many ways. The other things we'll be looking for are what kind of momentum builds towards any kind of ceasefire agreement. What could one look like? And of course, the big obvious one, are they building towards a leader summit between Putin and Trump? And when will that be? That's the key question that we'll be looking for.
Yeah. Okay, great. Greg, thank you so much for giving us a preview of what to expect today. We were just showing some images there of the U.S. Secretary of State, Marco Rubio, meeting with his Saudi counterpart. Now, Bloomberg's Russia economy and government editor, Greg Sullivan. Thank you.
Now let's stick in the Middle East. Hamas has indicated a willingness to stop governing Gaza after the war with Israel. The group says it's not necessary for them to be part of the political and administrative arrangements in the next phase, as long as it serves the interests of their people. The concession could fulfill one of Israel's demands for a second phase of the truce, but there's no sign yet of another demand for Hamas to disarm of being met. Let's now bring in Abir Abu Omar, Bloomberg's deputy UAE bureau chief, who is joining us now. So, Abir, this is significant for Hamas making this announcement, but what could this mean going forward?
Good morning, Jen. So, I mean, as you just mentioned, there's a lot of moving parts to this, right? The first thing is that Hamas, Hamas's spokesperson came out and said that Hamas does not really need to hold any political power. So it's the group's first explicit notion at saying that they don't need to have any political presence in Gaza. Now, that's a good sign for the second stage of the truce talks to start. But I think one main thing, the second part, as you just mentioned as well, of the second phase of the truce talks to start is for Hamas to disarm, which is something that it hasn't shown willingness to do. Now, a third part of this is Israel hasn't really said what it would expect of an alternative government in Gaza post-truce. So that's something else that Israel has rejected post Prime Minister Netanyahu's visit to the White House and his meeting with Trump. Now, a lot of Israeli analysts that Bloomberg has spoken to have said that Hamas ceding political power but keeping its weapons is really going to create a replica of what Hezbollah had in Lebanon, which is Hezbollah wielded a lot of political power without having any official standing. So look, the first stage of the truce is about to come to an end. Steve Witkoff said that he's optimistic about a second stage of the truce talks to start, mediated by Qatar and Egypt, like in previous truce stages.
Abir, let's move over to Lebanon, because the ceasefire deadline is wrapping up today. We've heard Israel, though, saying that they plan to keep 5 outposts still with boots on the ground. We've heard Lebanon in the past, though, criticize any sort of extended Israel stance. What are they saying now?
Correct. So November 18th, which is today, that is the day that the already extended truce that was negotiated by Hezbollah and Israel in November comes to an end. So this has already been extended to today because Israel said that Hezbollah wasn't keeping true to what it had promised back in November. So what we know is Israel did indeed give its ground positions to the Lebanese armed forces, but has kept 5 posts, as you just mentioned, Jen. Right? Those are the posts that are bordering some important Israeli locations. And that's what the IDF came and said yesterday, is that for security reasons, they are keeping those 5 posts. Now, that has that's drawn some criticism from Lebanon's newly appointed President Joseph Aoun, who is facing a lot of pressure right now to discredit Hezbollah and, negotiate with Israel to not keep its positions on the ground. But what we know is we need to keep an eye on the developments, especially that today is the deadline for the already extended truce. So, we'll keep an eye on what developments happen and keep you posted.
Yeah, a lot happening in the region. Appreciate you coming on, though, and giving us your reporting. Abir Abu Omar, Bloomberg's Deputy UAE Bureau Chief there, joining us. Now, still ahead, hear why Banque Syz says global equity markets remain incredibly resilient despite stubborn inflation and Trump tariffs. That's next. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, we've seen some major moves in European equities over the last 24 hours, with the European aerospace and defense stocks scaling an all-time record high, European fixed income coming under some pressure. To discuss more, I'm really happy to say that Charles-Henri Monchau, the Banque Syz CIO, joined us around the set. It isn't that often that something major happens in the geopolitical realm and you see such a tangible reaction in equity markets the next day. And that is exactly what happened for European markets yesterday, as investors started to account for, quite simply, more defense spending out of European nations. Do you expect this theme to have legs?
Well, there is a confluence of themes around this. Let's keep in mind that there is a major election taking place on Sunday, and the big topic will be reforms around the debt brake.
Yeah.
And the reform of debt brake might, let's say, allow rooms for more spending, including military spending, which, as you know, is in the middle of discussions also between the US and Europe. The US wants Europe to increase spending with NATO. They also want Europe to purchase more US military equipment. So there is indeed a theme around this, which is, let's say, increase military spending by Europe after decades of, let's say, underspending.
Are we placing too much hope on the result of the German election? We've been here so many times before, and they've been very resistant to loosen the fiscal purses. Do you think this time may actually be different with the CDU chancellor?
Well, yes and no. We're in the first quarter. So the first quarter is always around hope, and there is indeed hope that we'll see a catalyst after Sunday. Now, if we look at the situation, so the CDU is not really in favor, about the end of this debt brake, but more than half of the CDU voters are actually in favor. And with all this old theme about, let's say, European security, actually this increased military spending could be a kind of excuse of, let's say, giving away this debt brake. Not by much, but at least providing some leeway.
Why do you think European equity indices have outperformed other indices this year?
Well,
is this a valuation play?
Yeah, well, we know that it's cheap, but when there is a discount, you need some kind of catalyst. I think that there were big fears around global tariffs, and we are not seeing them, at least for the time being. That's point number one. Point number two, indeed, some hopes around the election. The fact that also China looks to be improving. And last but not least, remember, at the end of 2024, there was one very crowded trade, US tech. US tech have been under pressure with DeepSeek, and suddenly global investors realize that they need to diversify their portfolios. It's not just, by the way, a European story. We're seeing emerging markets also coming back, and also in the US, in terms of sector leadership, there is a change. So I think it's more like a global rotation trade which is taking place, and obviously Europe being very cheap is part of it.
Yeah, the language around tariffs, though, seems to be progressing. Again, at this point, there isn't a lot of bite. There's a lot of talk, but there isn't a lot of bite.
Yeah.
The decision has been pushed back until April. But one prospect that could be new to markets is President Trump has even said that VAT could be considered to be a way of countries mistreating U.S. goods. If he starts going after countries who are applying different levels of VAT, what does that mean to the thesis? I mean, maybe the bearish scenario is staring at us right in the face.
No, you're right. Indeed, I was, totally, underestimated last week by markets, because currently there is just so much bullishness on European equities. Was the biggest weekly flow in 2 years. But you're right. We are talking about a tariff differential, if you apply this VAT, as you mentioned, moving from 2% to 18%.
Yeah.
That's huge. It's if we really, let's say, place these cards, we are talking about, let's say, major hits to European exporters. I think for the time being, the market is just, let's say, assuming that a lot of, let's say, Trump rhetoric around tariffs is basically, let's say, bluff.
Rhetoric.
Yeah, and they want to see, let's say, real action, which is not happening for the time being.
Yeah. Do you hedge for the scenario of things getting a lot worse?
Actually not, because we look at the big picture, and for the time being, we stay risk on. We know that there is a lot of complacency, but if you, let's say, put all the things together, you have high nominal growth, you have global central banks still cutting rates, and then you have double-digit earnings growth. So we cannot be bearish on the equity market for the time being, so this is why we stay risk on.
Do you have a view on gold? It continues to go from strength to strength at the all-time record highs. They're close to it. I saw this morning Goldman Sachs have raised their forecast to $3,100. So where do you stand on the debate?
Yeah, we stay bullish on gold. We have been bullish for already some time. We also know that for the timing, it's mainly a central bank's play. The retail investors are not, let's say, following this. There was one interesting thing, actually, last week, which was not that positive for gold, coming from Goldman Sachs, by the way. They say, by the way, if we have these peace between Russia and Ukraine happening, that was the, let's say, war was the main trigger for gold moving up and, let's say, performing so well. What if, part of the, let's say, the negotiation is Russia and some BRICS countries moving back to US treasuries? That could be a major, let's say, risk for gold. We don't think this will happen. We think that, BRICS nations will continue to emancipate from the US. They want to shy away from US treasuries, and they will continue to pile up on gold.
Yeah, people always ask me why we pay such close attention to the politics and geopolitics. But I think this is such a good example of how events in Europe, in Ukraine, in Russia are having an impact not just on European markets but on global markets. So it really is worth paying attention to. Always good to chat to you. Thank you so much.
Thank you.
Charles-Henri Monchau, Banque Syz CIO. Now, still ahead, growing fears of a regional war as M23 rebels gain control across eastern Congo's border with Rwanda. We'll have an update on the conflict later this hour. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. BHP's first half profit slumped 23% as China's faltering economy dampened demand for iron ore, prompting the miner to trim its interim dividend to an 8-year low. CEO Mike Henry spoke to us about the outlook and managing expectations in China.
So look, I'll start with the last half performance, which was another solid operational and financial performance for the company. Good cost control within the business and production firing on all cylinders right across the business. You look at our iron ore business with record shipments for the first half, notwithstanding some of the pressures in the iron ore market that you refer to. Production in our steelmaking coal business in Queensland up by 14%. And the real exciting story here is copper production up by 10%. And that keeps us on track for 24% growth in this very important critical mineral over a 3-year period to the end of this financial year. Now, what are we seeing by way of near-term commodity demand? Yes, there has been some overall economic challenges or headwinds in China, but the sectors of the economy that are important to BHP's commodity demand, for the most part, have been performing strongly. The exception, of course, is the property sector. That has been under some pressure, but we're starting to see some green shoots there by way of increased new starts, property price rises in some sectors. So I think we'll see some momentum building into 2026. And we also expect that with a pro-growth stance having been reiterated in China, that they will calibrate their policy measures to ensure that the domestic economy stays on track or continues to gain momentum. And they'll calibrate those measures based on what they're seeing in export markets, with there obviously being a heightened degree of uncertainty there currently given policy settings in some other jurisdictions.
What's your forecast and I guess your level of preparedness when it comes to tariffs, of course, on China, but also potentially global tariffs, threatened, expected, but not fully into play yet? How does that impact both demand side, but also across supply chains and broader operations?
So, great question. Obviously getting a lot of attention on the part of everybody in the markets currently as to where that ultimately lands. And the reality is that we don't know. It's going to be weeks or months before we know where tariffs and counter tariffs ultimately settle. Having said that, BHP is a business, given our strategy and our portfolio, that is positioned for all worlds, including a world of heightened uncertainty. We've got commodities that are not dependent on any individual thematic, so they're broad-based in terms of their demand, both by the markets that they sell into, as well as their end use. And within those commodities, we have assets that sit at the low end of the cost curve, which gives us more resilient margins in the competition. So we're a full 10 percentage points ahead of the competition when it comes to our average margins. So that places us very well for a period of heightened uncertainty. And given the growth optionality that we have in the business, if the global economy stays on track, it continues to grow, the world's going to need a lot more of the metals and minerals that BHP produces. And we're right at the forefront of our ability to meet that growing demand.
That was BHP CEO Mike Henry there speaking with us. Let's just take a quick check at where markets are positioned ahead of the trading day, at least in the U.S. The U.S. coming back online after a holiday on Monday. S&P futures and also NASDAQ 100 futures tilting to the green, up just about 0.3% there if you look at NASDAQ futures. All three of these indices, though, did close last week in the green. So the question is, will we see whether or not that will actually continue? Of course, then with the question of the impact on potential future tariffs also still ringing in the minds of a lot of investors. But coming up, we speak to Khalid Al-Hussan, CEO of the Saudi Tadawul Group, on what the stock exchange operator has planned for 2025. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. U.S. and Russian officials are meeting in Saudi Arabia today to discuss ending the war in Ukraine, but without anyone from Kyiv. Meanwhile, European leaders are warming up to the idea of joint financing for defense spending. Hamas indicates it is willing to stop governing Gaza after the war with Israel. In Al Arabiya interview, the group says it doesn't need to be part of the next phase as long as it serves the interests of their people. Plus, the RBA cuts by 25 basis points for the first time since 2020. However, inflation risks and Australia's strong jobs market see the board remaining cautious on further easing. It has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Bersachi in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. U.S. markets coming back online today, Jen.
Yeah, Jumana, and a lot to pay attention to as far as the U.S. goes, but also the continuation of some of the momentum that we're seeing in a lot of other markets globally, and namely in Asia. And let's just get to what we have seen over the past few hours. It has been a positive start for Asian markets. A lot of that has been driven by some of this momentum from tech and, of course, DeepSeek. That was just a few weeks ago. And off the back of that, we did see the meeting with Chinese President Xi Jinping and some private sector leaders on Monday, giving an extra boost to Asian equity markets. But if we take a look at U.S. equity futures tilting to the green to kick off a shortened trading week, S&P futures right now up just about 0.2%. We did see all of the major indices in the U.S., though, closing last week in the green and still hovering near their all-time highs. The bond market also back open in the U.S. today. We're seeing the U.S. 10-year yield up about 3 basis points amid a lot of the continuing commentary that we are getting from Federal Reserve officials ahead of the Wednesday's minutes. That includes Governor Waller, who we heard from yesterday. But we're also seeing yields, Aussie yields in Australia marginally higher as well. That coming after that decision by the RBA to cut after just about 5 years. And hearing from RBA Governor Bullock, echoing a lot of the caution that we're hearing from central bank officials, on inflation progress and whether it can sustain. Brent crude right now up just about 0.3%, holding on to that advance as we received word of a potential delay to OPEC plus supply increases. Brent crude at just about $75.46 a barrel there. And a lot of the positive sentiment in Asia tech being a boom broadly for EM equities. Of course, we know they are a major part of the MSCI EM index, equity gauge, we're seeing that index up for a fifth day. The Hang Seng index also showing some positive sentiment, of course, coming after that meeting between Chinese President Xi Jinping. The index is now up more than 2%, approaching its October resistance. So clearly a boon for Asian shares more broadly. But let's just go back to the decision from Australia's central bank. They decided to lower interest rates for the first time in more than 4 years. The RBA cut by 25 basis points, but the board remains cautious on further easing. For more, let's bring in Bloomberg's MLive Asia team lead, Garfield Reynolds, who is in Sydney for us. So, Garfield, what did you make of some of the comments we did hear from Bullock after this decision?
Well, Jennifer, they were very much in line with what a lot of people had been expecting. the RBA had to some extent painted itself into the corner with its previous comments and then the lack of much commentary recently that it was going to have to cut interest rates. But the question was building, partly because markets were busy pricing in a total of 3 cuts for this year, whether the RBA was going to push back against that and make it clear that just because they did 1 cut doesn't mean they're going to rapidly move to ease policy from here. And that was very much the message that Governor Michelle Bullock delivered. She specifically called out that market pricing as being, in the board's estimation, misguided. So although there were some fluctuations in the currency and in bonds after the initial statement, once she came out with the press conference, made it clear where she and the board stood, the Australian dollar recovered and bond yields moved noticeably higher. And in fact, the RBA stance very much helps to align with some of that Fed commentary we saw overnight and the overall theme for bond investors that central banks are not going to ease with any sort of celerity this year. They're going to be very cautious about it, both because of lingering concerns about inflation as the data pulse was heading, coming into this year, and also, and again, Governor Bullock mentioned this, the uncertainty created by the Trump administration's calls for tariffs and then whiplash about what's going to come.
Right. Garfield, I also want to talk to you about Hong Kong stocks. We were mentioning that we are seeing them rally, but you have a column out that actually says the rally is vulnerably overstretched. Can you explain that?
Yeah, well, I mean, Hong Kong is a market that has a lot of, it's very skittish. The sentiment can turn very rapidly. A lot of traders look at technicals and they've sort of been conditioned by what's gone on recently to be willing to take profits off the table very rapidly. We already saw a couple of those incidents over the past week. We've got a very strong rally that had already been set off by some of the indicators that China's economy was turning around, then the DeepSeek issue that you mentioned, and then finally yesterday, Xi Jinping met with some key entrepreneurs. That sounded like it was going very well. So all of that's been building this momentum in the in the Hang Seng Index, the key index. Now, it's close to that October peak, as you also mentioned. And a couple of times before, it's come close to that, and then that set off profit taking, and it's come back down. It's also, for the first time in this rally, had the RSI, the Relative Strength Index, climb above 80. Normally above 70 is seen as a signal that it might be time to sell. It's a momentum indicator. With the Hang Seng, a lot of the time it needs for it to go above 80 before it really comes down. It's just done that. So there's going to be some nerves out there among traders that this could be a time when they want to look to sell, especially there's a little bit of nervousness ahead of Baidu, one of the key tech players, reports earnings after the market closes today. So if we don't get an endorsement out of those earnings of the strong expectations for tech, that would be seen as setting off some declines potentially. There may be some investors who are going to look to get ahead of that concern before the market closes today.
Right, and we're seeing the Hang Seng just up over 1.2%. So we'll pay close attention to that after those words. Bloomberg's MLive Asia team leader Garfield Reynolds. Garfield, thanks so much. Let's turn to the African region and talk about M23 rebels. They're tightening their grip on the eastern DRC after the Rwanda-backed rebels took control of the strategic city of Bukavu. It gives them control of all of eastern Congo's border with Rwanda along Lake Kivu. Let's bring in Bloomberg's Andira Oganga, who is joining us now from Kigali in Rwanda. So, Andiro, what does the fall of Bukavu into the hands of M23 rebels mean for the continuing conflict?
Hi, Jen. So Bukavu is a city of 1 million people, and it's a key transit point for gold that is mined in South Kivu province, which is then smuggled into neighboring countries and loaded into the global ecosystem, according to a UN expert report. It's also rich in tin ore, tungsten, and tantalum, which are used in portable electronics. These resources mean they have the financial muscle to keep sustaining the fighting. And just last month, they took over Goma, and the fighting left nearly 3,000 people dead, 3,000 injured, hundreds of thousands displaced. And Goma is the largest city in the eastern part of DRC, 3 million people. Yet now they're grappling with shortages of food, water, medical supply, and electricity. And this was part of the conversation during the Munich Security Council, where President Felix Tshisekedi was asking, how is it that the integrity of DRC is being violated, its inhabitants are being massacred, yet there's no action against the perpetrators? And he also faulted the AU and UN for failing to apply pressure on Rwanda for backing M23 rebels. Allegations that Rwanda continues to deny, saying they've taken an offensive and defensive posture to ensure that they keep their people and their land safe.
Ndiro, there's been a lot of question about when the international community will actually start to step in. Is there any likelihood at this point that they will, now that we're continuing to see the M23 take strategic cities?
Jen, what we are seeing right now is just condemnation. The UK Foreign Office said that the taking over of Bukavu by M23 rebels not only violates the sovereign and territorial integrity of DRC, but is also a breach of the UN Charter, and called for immediate cessation of fighting, and also called for Rwandan troops to withdraw from DRC. You also have President Emmanuel Macron, who spoke to Felix Tshisekedi of DRC, and he called for an end of the fighting, and also M23 to withdraw from Bukavu and the airport so that humanitarian and civilian planes can land. But what was most critical during the weekend is EU lawmakers calling on the Commission, member states, and international financial institutions to freeze any budget funding support for Rwanda until they cut all ties with M23. What we wait to see is how Rwanda is going to respond. They've handled this with an iron fist, extending a little bit of grace, but they're not showing any signs of budging anytime soon.
Thanks so much. Bloomberg's Ndiro Oganga in Kigali for us with the latest there. Ndiro, thanks so much. Now, coming up, we speak to Khalid Al-Hussan, CEO of the Saudi Tadawul Group, on what the stock exchange operator has planned for 2025. Stick with us. That's next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Saudi's economic master plan to wean its economy off a reliance on oil sales is showing up in one key area: equity offerings. A flurry of share sales by companies from tech startups to financial services firms is diversifying a stock market long dominated by banks and petrochemicals. The kingdom is also to allow foreign investors to purchase shares and convertible debt instruments in companies owning real estate in Mecca and Medina. Joining us now is Saudi Tadawul Group CEO Khalid Al-Hussan, live from the Saudi Capital Markets Forum. Wonderful to have you with us on the show. Thank you for joining us. Sir, let me just start off by asking you how the pipeline of activity actually looks for 2025.
It was disconnected.
Okay, we are looking to reestablish connection with the Tadawul CEO, but we know he's there, so that's a positive, and we will be talking to him about the outlook for some of the listings on the Tadawul Stock Exchange for the rest of this year, and then other measures that Saudi Arabia are introducing to encourage more foreigner participation. But let's, for now, take a look at some of the other key stories we're following this morning. It is reported that Honda is willing to resume takeover talks if Nissan CEO steps down. According to the Financial Times, Honda would be prepared to revive negotiations under a new Nissan boss who can better manage internal opposition. Dubai's builders are reporting surging profits and record sales. Amar delivered record profit in 2024, while Bin Ghati also more than doubled earnings from a year earlier. That demand has been driven by expats who've landed in the city and overseas buyers capitalizing on the boom. According to the Knight Frank Cities Index, Dubai was the world's third best performing location for prime real estate in 2024, with an 18% increase. Bloomberg has learned that Elon Musk's government efficiency team is trying to access a broad range of taxpayer data, including on individuals. The effort has prompted Democratic lawmakers to raise concerns over privacy issues. The U.S. has strict laws that prohibit the disclosure of taxpayer data, with some exceptions for law enforcement. And coming up, OPEC Plus is considering pushing back on the monthly supply increases set to begin in April. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. OPEC Plus is considering delaying a series of monthly supply increases set to begin in April. This despite calls from President Trump to lower prices. Meanwhile, European natural gas prices fell 5% yesterday, marking a fifth day of losses. Joining us now is Bloomberg's Dan Murtaugh from Shanghai. Let's just start with the potential news out of OPEC Plus, with our own reporting suggesting that they are once again considering a delay in putting extra oil barrels back to the market. What's the rationale behind it?
Yeah, this is something that's been going on since last summer. You know, OPEC Plus has been withholding its barrels from the market for years now. They were trying to do this to stabilize oil prices. The problem is that they're just facing a stubborn lack of demand. And so, you know, even withholding millions of barrels a day in production, you look at a place like China, where I am right now, you know, the economy growth has slowed. They're moving toward electric vehicles. And there's just not this year-on-year growth in oil demand like there used to be. And so OPEC is finding itself in this position of, you know, if they start putting their barrels back on the market, it could lead to too much of a surplus and prices starting to fall. And prices, while not, you know, super low, are certainly below where OPEC countries need them to be able to afford all of their government spending. And so they're sort of in between this rock and a hard place. And then on the other hand, you have Trump out there, you know, calling for lower oil prices, and at the same time, you know, trying to pursue peace in Ukraine, which could put more Russian barrels on there, and, you know, pursuing a tariff-led economic portfolio that could slow down economic growth. All of these things could be bad for oil prices.
Bloomberg's Dan Murtaugh in Shanghai, thank you so much. Well, let's get back now to the Saudi Capital Markets Forum in Riyadh. Joining us once again is Saudi Tadawul Group CEO Khalid Al-Hussan. Good to have you with us. I started off by asking you last time how the pipeline for activity looks in 2025.
Well, the activity in the market started to be very positive, good participation by both local and international investors, and we had a very healthy IPO pipeline, both in the equity markets, main and Namo, as well as the fixed income market.
So Saudi Arabia's Vision 2030 calls for more foreigners to participate in the stock market. If the data I have is correct, from what I see, the statistics show that around 30% of trading activity right now is coming from foreigners. What is your target number for that statistic?
Well, yeah, there is no specific number as far as target. I think our target is always balancing between institutional and retail investors' activity in the market, alongside attracting more capital to the market. As we witnessed in the last 2 years, the Saudi capital market have been very healthy in IPOs. More than 80 IPOs has been included in the market. So including an extra capacity from investors, both local, regional, and international, is very important. And I would say high-frequency traders who joined the market last year have contributed to additional activity and liquidity in the market, and this is a growing number between high-frequency traders, active foreign investors, as well as the regular quarterly rebalancing of passive investors from foreign side.
So to rephrase, do you expect that foreign participation figure to continue to go up in coming years? And just on the back of that, to what extent do you think that is dependent on introducing fewer restrictions and introducing reforms that make it easier for foreign ownership of some of these stocks?
Well, we continue to relax the access for foreign investors, applying international standards since we introduced the qualifying foreign investors framework back in 2015. And that is, all of these revisions of that access have resulted in more activities. As far as statistics are concerned, number of QFI registered in the Saudi exchange raised from 50 in 2017 to more than 4,200 QFIs now registered. We removed any access restrictions from the fixed income market to allow more participation. So I would say we continue the reform of allowing more access by foreign investors to both equity and other security platforms, and that resulted in an increase on ownership as well as number of foreign investors' participation and registration in the Saudi exchange.
Yeah, I remember speaking to the Hong Kong Stock Exchange CEO back at FII, and we were talking about a couple of equity ETFs that started trading on the index last year. What has that done to facilitate overall volumes trading and to bring in extra liquidity into the Tadawul?
So that initiative was to test the investors' appetite both in the Hong Kong side as well as in the Saudi side. We started with listing a Saudi underlying ETFs in Hong Kong, and as a consequence, also we listed two China-based underlying ETFs in the Saudi market. And the activity in these both sides ETF have been very positive to test the momentum and the appetite of Chinese investors as well as Saudi investors on underlying assets that is based on Saudi or Chinese underlying. And that is, I would say, the first door to open and to test the water.
Yeah. Let me just round up asking you whether you get the sense that companies may be holding back listing because of the uncertain geopolitical environment.
Well, in my opinion, if you look at geopolitical activities in the region, it has been there for quite some time. The market has been performing very well. Whether this is on attracting more capital formations for issuers, more interest by investors, as well as IPOs. So I would say the Saudi exchange have been very strong on stability of its performance, growing its clients, as well as performing as far as index is concerned.
Yeah, very clear. That's a good place to leave it. Thank you so much for your time today. Saudi Tadawul Group CEO Khalid Al-Hussan, live from the Saudi Capital Markets Forum. And a quick look at U.S. equity futures. U.S. markets coming back online after President's Day yesterday, leaning towards the green. S&P up 0.2, NASDAQ up a similar amount. Better day for Europe yesterday, though futures in Europe are leaning towards the red. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.